So in this lesson, I wanted to talk about some ways to think about financing your surrogacy journey. As we covered before, the average best case agency managed surrogacy journey is about $73,000. But of course, you shouldn't budget that because you don't know. So you always want to budget above it. So my recommendation is to budget about $100,000 for your surrogacy journey. And it might be even more than that. But let's just say $100,000. And I don't know about you, but I don't just have $100,000 saved up in the bank. So here are a few things to consider. One, you should check with your employer's human resources representative to see if there are any benefits that would help cover a journey. So it's just a simple question. You never know what they're going to have. More than likely, they're not going to have anything, but you might as well ask. Two, you should look into taking out a loan. And I'll talk about each of these three options. Finally, you could also consider applying for a fertility grant. So in terms of employer-sponsored benefits, only 5% of employers offer paid leave for intended parents, and very few companies provide surrogacy reimbursement. So some examples include IBM and Facebook, who offer up to a $20,000 reimbursement for surrogacy journeys, and Ernst & Young provides $25,000, and American Express offers $35,000, which is wonderful, but it's very, very rare. And $25,000 and $35,000 helps a lot. But most of the time, your employer won't help very much. But again, it always makes sense to ask. And especially as surrogacy becomes more and more common, I think we're going to see more companies offering some benefit. So if your employer doesn't help and you don't have money saved up, then your next option is to take out a loan. And in the next few slides, I'll talk about different types of loans. So in this slide, I talk about the home equity loan. So this is the type of loan that you can take out if you have a home and if you have equity in your home. So what does equity mean? Let's take an example. Let's say that you have a home worth $250,000 as determined by an independent appraiser, and you currently owe $150,000 on your mortgage. Then that means you have $100,000 in home equity. And as a general rule of thumb, lenders will allow you to borrow up to 75 to 90% of your available home equity. So in this example, you would be able to borrow about $80,000 to $90,000. Of all the different types of loans, home equity loans are generally the most desirable. Their pros are that the processing time is generally really quick, so you can get the loan quicker than you would other types of loans. And the interest rates are super competitive, and they are usually close to those of your first mortgage. However, there's a significant consequence if you don't pay back your loan on time. You might actually lose your house. And so you want to make sure that you can start making your repayments right away, because as soon as you receive the lump sum from the lender, you start repaying the loan every month for the term of the loan, which is usually between 5 and 30 years. Another type of loan is a 401k plan loan. It's an employer-sponsored retirement savings plan that you and maybe your employer have contributed to during your employment. Although the money in a 401k plan is meant for retirement, things do happen in life that you don't expect, such as surrogacy, and you have the ability to access a portion of your retirement savings plan. So the pros of a 401k loan is that all the interest that you pay on the loan actually goes back to you. In fact, depending on what kind of market you borrow in, you can sometimes make money. And requesting a 401k loan is fast. There are no lengthy applications or credit checks. The cons is that usually there is some significant limitation on the amount that you can borrow. So in normal times, you are limited to $50,000 or 50% of your assets, whichever is less. And during coronavirus times, the limit has been increased to $100,000, but we don't know how long that's going to last. You have to pay back your 401k loan quickly within 5 years of taking them out. And if you change jobs, you will have to repay the loan in full. The next loan I'm going to talk about are fertility loans. And these are loans that are fertility specific. So that means that you can only take them out if you're going to use the money related to infertility. And many fertility specific lenders quickly process applications within a few hours and coordinate directly with many fertility clinics. So this helps eliminate some paperwork and wasted time on your end. Some fertility-specific lenders will loan up to $100,000, which is hard to find among personal, regular loans. However, these fertility lenders, usually demand a slightly higher interest rate than personal loans and require a higher credit score. So usually they demand a FICO score of about 630 or higher. And some fertility lenders that loan close to $100,000 include Prosper, Lightstream, CapXMD, and Egg Fund. So these are some ones to check out. The last kind of loan that I'm going to talk about today are personal loans. And these may be more appropriate if you need to borrow less than $100,000 or you have a lower credit score. There are many more options with these loan types. You can go to many different websites and you can find what the best lender will offer you. However, be prepared to fill out a lot of paperwork and wait for approval. So the lower your credit score, the higher interest rate you're going to have to pay on a loan. So apart from a loan, you can apply for some fertility grants. So a fertility grant or any kind of grant is a lump of money that you receive that you don't have to pay back. And there are multiple nonprofit organizations that will grant some amount of money to eligible candidates, including candidates who need a surrogate. So the eligibility criteria vary across these organizations, so you'll need to check with them to see what they are. But some ones to check out for grant money specifically for surrogacy include Baby Quest Foundation, Adoption Art, Journey to Parenthood, and Coalition for Family Building. However, the most that you can generally expect from one grant is $10,000, and some organizations won't let you apply if you've already received a grant from another organization. So you can't apply to like 5 of them and get $10,000 from all 5 and have $50,000. That's usually not going to happen.